If you got your first salary or the first few months of being in a new job, chances are you're super confused between the amount that has been credited into your bank account and what was actually promised to you on your joining letter or your offer letter. They didn't tell you. Yep, they don't teach in school what you really need to know. I know. I wish they at least gave a warning, right? But they don't. So let's talk about where did that money go. If you ask anyone in your organization where is this money gone, chances are you would have gotten an explanation that it's PF, it's taxes, it's this thing cut. So what are these things? Let's talk about those. So CTC means cost to company. That's everything company is spending on you. The reason they term it that way because it's an accounting term, it's an HR term in that sense that that's practically actually legit what company is spending on you, which it needs to show in its books. And what is in hand is the final amount that remains that is paid to you as salary. And most likely with your payslip you will get a breakdown where you can it's a good time to probably find it and pick it up, and we will talk about what are those items on your in your payslip. So for the first time items you are likely to see is your PF EPF cut, and it'll be varying kinds of amounts. A lot of companies nowadays default to 1800, which is the minimum contribution from your side, and the similar contribution goes from the company side, and that amount is so the PF amount is first part of it. Second biggest chunk is likely to be taxes, and these taxes are I know you don't want to talk about taxes at all, but I'll try to make this as simple and as interesting as possible. So there are two kind of taxes: direct taxes and indirect taxes. Indirect taxes are the ones we pay, like sales tax, etc., etc. When you buy something, there's inclusive tax, etc. So that's taxes you pay as a result of you buying something else, doing another transaction, and that's indirect taxation. Direct taxation or direct taxes are the one you pay directly to the government, and that's typically on your income, on your on certain kind of returns on investments or sales or certain kind of capital gains. When we are talking about Indian income tax, it's roughly, this is how it works. You have different buckets, and each bucket contains a certain amount of money. Let's take an example in a hypothetical currency called beans. Let's say you make 1000 beans as a salary, right? And you have three buckets that the government needs you to put those beans in. In the first bucket you put 10 beans, in the second bucket you put 100 beans, and in the last one you put rest of your 890 beans. And now the government says that in the first bucket there is no tax, we will not charge you anything, there's no tax to be paid on that. So you take out the the beans in the bucket, those are your tax free, that's your tax free income. In the second bucket the government says I'm going to charge 10% tax rate. So out of those 10 beans, the 10% is one bean. So you give one bean to the government and the rest of it you take home as salary. In the third bucket, government says I'll charge you, let's say 20%. So out of those 890 beans, you give 20% of that as taxes, and the rest you take away home. And these taxes are paid at an yearly level. So companies try to take your yearly tax liability, divide it into monthly thing, and then pay it. These buckets are called tax slabs, and they are right now I think 3 slabs in effect. And these keep changing every financial year, and when the government comes out with budget now in February, we'll know the new tax rate and the new tax slabs. So this is how taxation works, and a small large other part of your salary, for some people it might be bigger than the taxation part as well, will be all the amenities that the company gives you. It could include canteen, it could include transportation, it could include things like gym, it could include other coverages, medical, tons of other things. For a lot of people, the in hand may fluctuate as well. That's most likely because you've not declared any tax save, any investment that you've done, any tax savings option that you've taken up, which a lot of companies will assume that you will do, but so they pay lesser tax, and as March gets closer or finally March comes, you owe that tax, so you have to pay that tax, and at that time you will have to pay a bigger amount because you've not done that. So how do you save these taxes? Is there a way to save these taxes? Most likely you've realized that there is far more to this than anybody has ever told any of us, right? And I'm afraid to say that yes, you can save taxes, but that's not gonna be all. There's much more to learn. In fact, if you do the calculations right, our generation, most of us, we cannot retire. There's just not enough money, your expenses will keep increasing. We will not be able to save up for retirement at all. And you're like, why should I think about retirement? I'm like 20 or something, right? Or maybe even 18, like 19, 16, I don't know. How old are you? You need to think about it right now, because if I show you the math, and that's what I'm going to do in my next video. you will realize even if you want to retire, and if our generation wants to retire, some of us will have to work for 200 years. That's at least the calculation that came up for me when I first started studying personal finance. That gave me a big shock, and that's what made me interested in personal finance and how to save, learn about all these things, investments and savings. And a small warning that none of these videos are going to be investment or saving advice. These are just my personal experiences that I'm sharing with you, all the things that I learned and I believe you should learn yourself. In the end, if you are looking to manage money, if you're looking for advice on where to invest, etc., etc., you should hire a certified financial advisor, certified by SEBI. So this is not financial advice. This is just my experience and the things that blew my mind. I also happen to work in a tax saving startup and clear tax back when it just had started. Even then, I did not understand, what these taxes are, and it took me a long time to learn that. And I hope I can share some of that knowledge so you don't have to go through all those shockers and a big learning journey again. And not all of us are gonna read books on finance and study models and do all of those things. But there are some basics that the school never taught us that are absolutely necessary for you to learn. I'm soon gonna post a video on why FD is probably the worst way to save money. Literally the worst. We'll talk about that.